All right. Good morning, everyone. Dan here with the Tradingology Trading Room on April 7th. Good to see you guys. A few of you already rolling in, ready to rock and roll. How are you guys doing this fine morning? Get my chat window over here so I can see you. Good morning, Dave.
Good morning, everybody. Morning, Dan.
Exciting morning.
The Fed wasn't kidding when they said they were going to expand their menu of asset purchases. I'm pretty sure they're in stocks because we've been up 2,500 points in 2 days.
Yeah, that's kind of amazing. That's quite the bull trap call it on the spreadsheet, so we can touch on that too, at least in the first few minutes.
Yeah, once you get into that, I've got to make a quick call. I'm just going to mute myself and I'll be right back.
All right, sounds good. So for those that don't have the spreadsheet yet, definitely get a hold of this guy as a subscriber for Market Timer. And good morning, Andre. Good to see you. I'm going to keep this. I got my eye on this one. So I'm looking to enter an ES trade if we get through my levels here. So I got one eye on that and one eye on talking to you guys. So we had a bull trap set up, which shows in both the spreadsheets, and those that are in the Slack channel saw this morning. We had a conversation around it. So if you're not in the Slack channel yet as a member, definitely get in there too. So it's when we have either the first and the last or the second to last column fills out as our bull traps on the spreadsheet. So this is an example of a bear trap on the bearish side. So first and last, first and second, what it looks like on the chart itself, I'll pull up my picture, is this. You see when the BOP script detects that gap, it'll fill in the arrows. So you see the little arrow there and this is on the daily chart. So here's the previous one for the bear trap. My awesome handiwork this morning. So that's how they look on the charts as well as the spreadsheet. And then we see when the open came, we were way above from the overnight futures trading, and we saw the open came up on pretty much all of them except for the Russell is traded up and the shot right down. It actually touched right on my entry point, but it didn't go across, so I did not get in this trade for a long. I'm in my no man's land or no trading zone, or whatever we want to call it for right now on my ES trade. For those that haven't heard or seen, this is exactly what's being released this week for the ES Futures Masterclass, and I will show you how I set these levels. For our members that are in there, you'll get to see that. Andre, what does what mean? The bear trap or the bull trap? So a bull trap is they're trapping you thinking that it's going to be higher and you're going to go long. Then they snap it back down short. That's a bull trap. And the bear trap is just the reverse. So when the bear trap shows on the spreadsheet, that's a signal that it's most likely it's a fake move. That's why they call it a trap. So we'd see the bear trap showed up this day, and look what happened the next day. 690-point move on the Dow, 85-point move on the SPX. So we're expecting, typically what happens when we have a bull trap is just the reverse. We're expecting a downward movement. It'll take a while. Obviously, we're opening up. Oh, where's the future? Or where's the index? 700 points up right now. So it's in the perspective. So the bear trap, or excuse me, the bull trap will open higher, then it'll probably retrace back down. That's what those mean. So it's to be cautious of the move because it's probably fake. And we got a few more people at the door. Let you guys in. There we go. I got to keep the waiting room that you guys saw. For anybody that didn't know, where there were so many crazy things with Zoom that people are jumping into open Zoom meetings. So This will probably be the last one where I do it without a password. So look for a password being set on it starting Thursday, because there's apparently scripts out there that look for open Zoom meetings. So I'll be putting a password on my Zoom meeting for this starting Thursday.
Well, what they're doing, I don't know if you noticed it in your Zoom account, but they are now automatically password protecting each Zoom meeting.
Yeah, all new ones. So since I had this one created before that was in effect, you guys didn't have to put a password in here yet. So Thursday you will.
Right. But what they're doing is they're putting they're giving you one link that includes the password.
Yep, they embed the password in the hash.
Yep. So you don't have to actually enter the password. You just have to make sure you have the link with the password in it.
Right. So we'll make it as easy for you guys as possible and staying safe. So if you see anybody, you let me know and I'll kick them out.
Yeah. I just sent out an alert in the real-time update service. I shorted DIA at 234.57. We'll see how that works out, but I think that's probably going to hold. I had a target in the RTS service that 23,391 to 23,450 was my target for the Dow, and we hit that this morning. So we'll see. We may bounce around a little bit here, but I feel pretty good about that target and short position.
Nice. Yeah, just completely buried to the upside still on the internals, but not trusting anything.
No, not trusting it really. It's just strange that we've seen 2,500 points over the last couple of days. The Fed announced that they're going to be buying assets. There's a report out by the Congressional Research Service. I don't know if you saw the live stream I did. It was yesterday.
I caught the first half. I didn't catch the second half.
All right. Well, in the second half, this Congressional Research Service had a report that they did on March 27th, 2020 on the Federal Reserve emergency lending. I'll put this PDF in the real-time update service. And if you go down to page 24, just for your reference, basically the Fed, since the 2008-2009 financial crisis, has created these what they call SPVs, or special purpose vehicles.
Mm-hmm.
What I like to call the special purchase vehicles, because that's all they really do.
Yeah.
They are 100% controlled by the Fed to skirt around the Section 13.3 restrictions that they have in their mandate to directly buy other types of securities besides treasuries. And so, I mean, basically in the document it says, during the crisis, the Fed structured many of its transactions under Section 13.3 as loans to an LLC or SPV that it created and controlled. And so they have full control over these LLCs and SPVs, and who knows, they don't have to report on what they purchased. And since there's really been no audit of the Fed, we don't even know what they hold. But they create these LLCs and SPVs to be able to go out and buy anything they want. And so in this document, it doesn't say specifically what they're buying, and I don't think we'll ever know. They mentioned on TV publicly that they're buying ETFs, but never mentioned in that document. So they could be buying, in my opinion, they could be buying, including crypto and digital assets. Digital assets are now a new asset class. They can buy gold, they can buy silver, they can buy ETFs, they can buy crypto, they can buy just about any asset class that they want.
Wow.
Morning, Greg. Yeah, I know. Wow. So it's kind of funny that we've seen crypto go up over the last couple of days, correlated very, very well with stocks.
Yeah, I had to take a picture and I tweeted it out, and I know you caught it, but I had to take a screenshot because something in me told me I should capture it passing 20 cents for some reason. Like it might not be back here. Something inside me just said, grab a screenshot of that.
Yeah, that was a good one. Yeah, I retweeted that, and because I think it took a lot of people by surprise because we were hanging around that 16, 17 cents level for so long, and then it just kind of like, man, Sunday night it just started going up.
Nice and slow. We'll take it up little by little.
Yeah.
Mark says, good morning. Would you please give an overview of what you're looking at on the market timer sheet? I did cover it in the first 5 or 10 minutes, but we can just quickly let you know we saw a bull trap on the spreadsheet, which is exactly when we see the gaps on the ends of the herding. So whether it's the bear side, this is a bear trap, and this is a bull trap. So we're expecting a pullback after the open, which is exactly what we're seeing. I had a big one at the open. They tried to push it back up. Now we're going back down again.
Yeah, they're just trying to suck in people. So that bull trap works out typically well in a declining market. If we're in a bear market, it works out well. If we're in a bull market, the bear traps work really well.
Oh, the market timer chart graph I have pulled up. Sorry for the confusion. Are you talking about the internals up here?
Oh,
So that's looking at the internals. Mark, I have the exact answer that you need. Go in the members area and review one. I labeled it specifically how the internals, but these are all showing bullish signals right now. Advanced decline is up, the volume's moving up. These scripts are showing us all positive, but I covered this a couple times and I got a recording for it for you just for this case. So go ahead and review that guy and email me if you got any specific questions on it. How's that work for you?
Yeah, the internals right now are very, very bullish. We'll see if that doesn't change because it looks like prices are starting to lead the way lower.
Yep, now we're running down. See, I was close to my long trade, which we didn't hit it, so I didn't get in. Now we're coming up to my short trade, so maybe we'll be trading during the trading room. So if I stop talking to you and I'm in this, don't hold it against me. Because this is my entry for a short now, as if we break below 26.97, whatever that is exactly there. Yep, 26.97. I'm looking to take it short on the ES. Do not follow me until you know how the system works. And you will know shortly. I have my mentor reviewing it as we speak.
Yeah, I'm going to dig right into them as soon as we're done here today. Absolutely.
Appreciate that. All right. Yeah, let's
so there's an interesting tweet out. I'm not sure. I got it on my phone and I'm not sure if I can, let me see if I can get this on the computer or just copy it and send it to you. Let me see if I can do that. Copy this.
Good morning, Team Kiefer. I'll say it wrong, I'm sure, whichever way I pick. We'll call you Kiefer Sutherland. How about that? That's the way he spells it, isn't it?
Oh, yeah.
That's it. All right.
That's Keith.
Oh, here we go.
Imagine.
26. We're getting close, boys.
Okay.
Just dropping.
I sent that over to your. I sent that over to your the chat that we use at WhatsApp. I'm not sure if you can get that on your computer.
Oh, I can. Yes.
Can you? Okay.
Let's see where it opens. Which screen is going to appear on? Perfect. Oh, we're getting close. All right. Here's good. There we go.
This is pure speculation, but I don't know if you remember a few weeks ago. Well, no, it was a few months ago now that there was revealed a patent that Bank of America came out with. And they had indicated that Ripple in this patent, in order to make payments through Bank of America. And so I don't know if there's any validity to this at all. I really don't. We know that Bank of America has been sitting on Ripple's steering committee since they really were formed. But this guy is tweeting this out. Now, this guy has 30,000 or so subscribers, I think. If you hover over his name, let's see how many subscribers he has. I think the guy has some legitimacy over 80. Yeah, 35,000 subscribers. He's not somebody who just kind of tweets out stuff without some sort of basis. And so it would be very interesting to see if Bank of America actually acquires Ripple later this year.
That would be interesting.
And that would obviously mean huge adoption for XRP to be used in their payment flows. That'd be interesting.
All right, so we're looking for an entry here.
Keith, hi Dave, got the script loaded? Okay, great. That's good to hear.
All right, we'll give you a live view of this. I'm short now the ES.
I am swamped with support emails, by the way, guys, for Strong Market. So if I didn't get back to you for some reason, just have some patience and resend it to me in case so I can see it. There is so much going on right now. It's just absolutely insane. Also, don't forget, tomorrow is a Wealth Masterclass update.
That's right.
You guys who are in that class definitely want to see it. Definitely want to be there. Really good stuff. Yeah, we cut everything in half. We're only at 530 on the Dow futures right now.
Yeah, we got the signals moving down here on SM. Andre, the master class is a recording that I have, so it's not a live thing. So that'll be the way it starts. So I'm thinking about that. If it does turn into something where people want to do something live, I might offer it, but that's not on the table just yet.
Are you talking about the Wealth Master class, Andre? Or
sorry.
The new
yeah,
MEMs?
Probably is.
Oh, okay. So that's going to be 1 p.m. Eastern time tomorrow, Andre. Yep, 1 p.m. Eastern. The link is already in your portal. Yeah, I may have to change that too to upgrade it with the new password.
Yeah, probably. Good idea.
Yeah. But check tonight if there's a new link. I'll put it in there this afternoon.
All right, we're watching down here. More volume come in. Price signals are moving down.
And we got a little support on RTY at that one level.
Yeah, it's bouncing off. It acted as support for sure. Where'd the YM go? YM's jumping off the chart. Let's move that guy. YM came around to that Camarilla. I might take the VWAP off my 5 minutes. I'm not sure as much if it matters as much as it does like on the daily charts. What do you think about that, Dave? Have you used that very often?
I have not used it, no. No, I haven't used it. I don't use any moving averages at all, actually, on the charts. I've been using the pivots, but not the moving averages because they do delay, especially when it's a fast-moving market like this.
So I've talked into one. I just haven't talked into the second one yet.
Yeah.
All right. Yeah, it's still all high up. Move that across. Interesting.
Up-down volume is straight up. Look at that. Just absolutely straight up here. So we may not see, I mean, obviously we're seeing some selling coming into the market, but you know, it's interesting. I was talking with somebody yesterday that if the Fed, and this was on a Greg Manarino, I don't know, do you watch his YouTube videos?
I don't know his, nope.
Greg Manarino, yeah, he's out in New York. Actually, I think he's out of California. I don't know. For some reason, I think he's in New York. But anyway, he was talking about the fact that he calls the Fed now the WCB, the world central bank because they're basically, taking over so many different central bank facilities across
Right.
the world and the swap lines and so forth. And then Mike Maloney, who you do know, I
Yes.
for sure, was mentioning the fact that if you add up all of the stimulus that the Fed is doing, that they will eventually be the only owners, like 2/3 of the entire bond market will be them.
Yeah, and that's just ridiculous. I did catch that one, and the other number that was very interesting was how much this is going to cost the taxpayers to pay it all back.
Oh, jeez.
It was like $95,000 divided by or into the even out of 330 million people.
Yeah,
So that's what you're signing up for with all the stimulus is $100,000 tax bill.
basically, yeah. I mean, there's no way that. I mean, that's every single person in the United States.
Yeah. Talk about kicking the can down to another generation.
Several generations, I think.
Yeah.
There's just absolutely no way they can do that. It's kind of sad. I think that, I mean, I feel like they think that they have no other choice, and
Right.
so
That's all they know, right? They're just repeating previous mistakes because that's what's in the playbook.
yeah, that's really all that they know. Um, what's interesting is on the U.S. debt clock, they've added cryptocurrencies.
Really? I haven't seen that. I didn't look this week yet.
Yeah, and the dollar to gold ratio is now like almost 18,000.
Whew.
Yeah, and they added the dollar to crypto ratio now.
What are they using Bitcoin? I'm assuming.
Probably because they have the dollar to crypto ratio. Well, the dollar metric that they're using is the M2 money supply. So they're taking the M2 money supply and dividing it probably by the total market cap of crypto. And so it's down on the right side, close to the bottom.
There
It's
it is, 76.
yeah. And so in 2013, it was 98.06. So it looks like, I mean, crypto's been in a bear market for a long time, but I'm not sure exactly how they calculate this.
17,000, almost 18,000 gold.
Yeah. That's gone up tremendously. Remember, we looked at that at the end of last year, it was like 6,000.
Wow.
But if you hover your mouse over that crypto ratio, it says that it's the total US M2 money supply divided by the total market cap. Yeah, there we go, of all cryptocurrencies. And the source of that is the Federal Reserve. I wonder where they're getting that total market cap of cryptocurrencies from the Federal Reserve. I haven't seen that.
Well, coming up to a target. Sorry, I got to ignore you for a second again.
Yeah, that's an interesting one to keep an eye on. Oh, look at that. Wow.
I'm looking, there's my first exits right here. Price signals are moving down. Here it comes. Come on down. You're the next contestant.
Yeah, wow. Just a complete reverse there. A little
Yeah,
bit
they're starting to track down. Looking for another push down.
But look at the up down volume is like pretty strong. I haven't even
Yeah,
seen
it's very strong there.
even seen
Advancing declining starting to stair step down.
a little bit, but it's not below 2,000 yet.
Right, that's broke below.
Yeah, I would say don't short this market until we see that advanced decline line really start to decline below 2,000, because this could also be now a bull trap or a bear trap rather, and they're gonna take it higher.
All right, I took a quick short. I'm getting out because I don't like this. It's not going to continue, so I grabbed a quick scalp there on the ES. All right, we turned my regular move into a scalp because we didn't like the agreements. But there's your quick Dan trading while doing the trading room, so don't try that at home. Okay, Dave, look at my NQ here. If you don't like moving averages, look at that respect.
Yeah, that's good.
200 EMA right there.
I do like the 200 and the 50. I do like the 200. I just don't put them on all my charts. I do like them.
All right, I can relax more again. Protect those profits. All right. Let's look and see what our other indicators are telling us. Yeah, I have a feeling full hurting still to the upside.
Yeah. And that's on a 10-minute, so there's like no bearish hurting coming in at all.
Here's our little clue. BOP curve tends to lead, and that is starting to falter. So we'll see if that's our leading indicator there.
Yeah, let's see. I think this is just a little bit of a pullback before they take it higher. So if they do take it back all the way up to, let's see, where would the next, if you have a daily chart on the Dow, what's the next resistance area? Have you kind of like done any numbers on that?
Not today yet. Let's see. Do I have a daily?
I did a fib, and so you got the 50% at 23,879.
These guys over here.
I guarantee you, though, guys, this is not going to last. This is a bear market rally. It's a bear market rally. We're going down again for sure. Whether we surpass the old lows or not, I don't know. We'll have to kind of see where we go. But this is not a rally that you really want to be a part of on the long side anyway. Unless you're scalping, like Dan.
I'll teach you how to do it.
There you go. I'm gonna dive into your video so I can learn. Yeah, it's just look at that. It's just it's pretty much insane. I think we're gonna look back on this in about 6 months as like, oh wow, this is like the shorting opportunity of a lifetime.
Yeah, because it's coming down here.
Yeah, we're definitely going lower. They closed a couple of gaps. They closed that one big gap there right to the left.
Yeah, they just gap filled that one, is what we just did this morning.
Yeah.
Oh, Kevin's talking alphabet. If it's going to be a W, usually it's the V and the H, and boom. We'll see.
Well, this is a let's see, if you're an Elliott wave fan, we had 5 waves down and it looks like 3 waves up. So 3 waves up is a bearish indication. We have one pump up from the bottom, a little bit of a pullback, and another pump up, which is a 3 wave. So that's also pretty bearish.
There's still that one bear hanging on. He's not done yet.
Kevin says Tom Bukowski was thinking it was a bearish market as well a few days ago. I haven't checked his site in a few days to see if he's changed his mind. Tom Bukowski is a very, very smart guy. I like his stuff. That's for sure.
That's the one thing to keep in mind too that you've probably read, but just to reiterate is, yeah, we had what was yesterday? 1,600 points. Those only happen typically in bear markets. To have that large of that doesn't happen in a bull run where we're up 1,000 points.
Right. Yep, that's true. Yep.
That's just that extended volatility. Okay, we'll move him back.
So Thomas Bukowski's at thepatternsight.com from yesterday, his week ahead projection is that I show the S&P 500 index on a monthly scale, which is unusual for me. Most times I stick to the daily scale except under certain conditions. This time I wanted to put the recent movement into context, hence the monthly scale. Um, he says this is a broadening top formation on the monthly. And he says it does not really tell us much about the coming price movement. If you switch to a weekly scale, you get a hint of a partial rise. A partial rise correctly predicts a downward breakout from a broadening top 52% of the time. So, I mean, a little bit better than 50-50.
So there's the weekly look. The weekly's definitely got a potential just to be the V recovery.
He admits, though, that with the current health crisis, the charts have fooled him.
Yeah, all bets are off with the current state of affairs. There's a monthly.
He says, I do expect the markets to tumble, but we're a long way from puncturing that lower trend line. With the current volatility, however, that's only a day's move. Yeah, that's true.
Well, it's like you were joking the other week. Only 8 more days of this, we'll be at 0.
Yeah, yeah, jeez. The Fed saved us.
The Fed's going to own the world.
And then the Treasury is going to own the Fed.
Right?
Wow, we came right up. Is
Look at
that
that.
200 on the monthly?
Yep.
Wow. That's interesting. So we're below the 200 on the monthly. You know how bearish that is, guys? I don't think I've seen that in years. I don't even think 2008, 2009, we didn't hit that until like October, November of 2008. Yeah, where's 2008? Right there? September. Yeah.
I suppose I guess you could say this one closed below. This is where it first hit it.
Yeah. Okay. That was June then. Okay. So we're, yeah. And then it just kind of hovered around. It looks like it closed above it maybe in July,
Just
August.
below. This one was right on it.
Right on it. Yeah. But it held. So yeah, just heads up.
That
Heads
held
up.
as different move away.
Yeah, that 200 is really critical. Is it pointing down as well? It's not. It's still pointing higher. So,
Yep.
but it's acting as resistance.
Yeah, because we came way down. That's just an amazing month.
Yeah. 26 to 18.
I'm just doing double takes. I've noticed as I was looking through the spreadsheet the other day, and I saw this. I'm like, did we seriously have a $3,000 down day? I'm like, wow.
Yeah.
It's like it just happened recently, and like a 2,000 up. It's like I had to go look back. I'm like, is that right?
Yeah, this is crazy. I mean, 10 years we had no volatility at all, and now we're getting lots of it.
And if we compare on this monthly chart, take a look at this. So looking at the BOP curve, and as it's moving up, how high it peaked there on the monthly chart now.
Oh, yeah.
So if we come up to here again,
Yeah.
we're only 7 days into this month. This thing doesn't mean it's got to stay green. This could be down here at the end of the month.
Right.
So that's something to keep your eye on. Down here, right now it's low, but we're only a quarter of the way into the month. So we'll see if this builds up or not. Or if it turns green and they completely make a $20 trillion deficit.
I had a thought about that yesterday, and I can't remember what it is. There's some reason why, even though they're pumping so much money into the market, it would not. Oh, here's why. Even if they the average volume on the NYSE is 3 billion shares a day. And in order for, for 300 billion, let's say they set aside 300 billion in order to pump up the markets, it would only last them 10 trading days.
Wow.
Because you'd have some buying, selling, buying, selling, buying, selling. It would only last them about, actually a little bit, about 10 trading days, right? 10 times 30 is 300.
Mm-hmm.
So, but if they put it into crypto, they could double the market cap of crypto.
There you go.
They'd get a big bang for their buck if they put it into crypto instead.
It's going to have to move there sooner or later, right?
It will. I think it will. Kevin says, I try to use market timer as my primary guide and Tom B as confirmation. Oh, he's got a system there. Look at that. I do like Tom B. I've watched him and for years, for a very, very long time. I wish he did live streams. I wish he did YouTube videos. He doesn't do YouTube videos, does he, by any chance?
Not that I've seen anywhere.
Yeah, I don't think so.
Yeah, they dropped a green in there. Continue to higher, so. Yeah, decent crowd. You guys are a quiet bunch outside of Kevin. Kevin's taking all of it. Any other questions you guys got?
Yeah, 10:38, guys. We got about 20 minutes left. Anybody got questions? Unless you got to wrap up early today.
We're okay.
We're good.
Or you just want to see me get back in here? It's not a good re-entry. I'm not taking it this time. Things aren't lining up. Volume's going down. Price signals are coming up.
Yeah, but they're pretty muted. Look how small those green bars are.
Yeah, compared to what it just was.
Yeah.
Negative 67. We're just floating around the 10.
Yeah. But the internals are holding up pretty well.
Yeah, that's interesting. But we were up 3% on the futures overnight again, so it was like a repeat of yesterday.
Yeah.
So it's one of those when you start so high up, right? We can drop some and it's tricky. They still look good, even though they drop a bunch at the open, at the closing.
There's now think about this for a second. If the Fed is going in and buying ETFs, they're putting money into the ETFs. The ETFs have to go into the market and buy stocks in order to put that money to work.
Mm-hmm.
So I'm going to assume that the Fed is probably focusing on the SPY and the diamonds. I mean, that's the majority. Maybe the Russell, but maybe not. So, and the NASDAQ 100. In order for them to do that, they got to buy the QQQs, the SPY, the diamonds. Maybe the IWM. I'm not sure. But they're probably focusing at least on those four major ETFs.
Right.
It covers just about the entire spectrum of stocks. And that's why we're up on all of them. So I think we'll see a decline for sure, but it won't be the kind of really bad situation that we probably are going to get into. All right, Kevin, have a great day. Good luck.
Yeah, they don't know how to stop meddling. I mean, we haven't had a true fair market in 30 years.
Yeah.
Years?
Yeah. Yeah, really since the bottom of 1982, the bottom of the market in 1982. It's just the Fed has stepped in. They said what they're going to do, and they told everybody to buy. And they're pumping it up ever since. So if you want to wrap up, we'll just show them that RTUS post, and then those guys can go check it out. But basically, I believe what's going to happen is we're going to be in a deflationary depression for the next year to 2 years. Over the next 6 to 9 months, after the Dow hits about 15,000, after about 15,000, we're going to see probably a rally in stocks back up. And then after the election, we'll probably go lower. If you read this, you're going to see the only asset class that we know does well in the first phase of this economy is cash. That's it. So whether you hold it, so I got a time frame there: 1 to 2 years of deflationary recession depression, 10 years of hyperinflation after that. In the first phase, we're going to be looking at the only asset that really does well in that environment is cash. After that, hyperinflation, you don't want to hold cash at all. Zero, you don't want to have cash. You want to start buying the real estate. You want to start to invest in stocks again, because we're probably going to see a massive hyperinflation driving all asset prices, including gold and silver, higher. But gold and silver will probably go down along with this deflation in this deflationary environment, just like every other asset class. It's always been true. It was true in the depression in the 1929 to 1932. Gold and silver actually went down. We'll probably see them start to turn up before the stock market does, and that's going to be kind of the sign that you really want to start getting into commodities, and gold and silver especially. But now is not the time, because we're probably going to see gold at 1,000 and silver below $10 before we're done. Just my opinion. That's all. All right, Voltaire. Have a great day. Ron asked Dave the difference between deflationary, recession, and depression. I'm saying it's deflationary. A recession is fairly mild, but it looks like the recession that we had indicated that would happen last year because of the economic situation we were already getting into is now turning into a depression. So a depression is when deflationary forces are much, much stronger. So we'll probably see real estate decline 50 to 70%, maybe more. All asset prices are going down, including wages. Wages are going to decline. So if you have a job now, you'll probably see 10, 20, 30% cuts in your wages, along with all asset prices. So the difference between a recession right now looks pretty good compared to a depression.
Well, what was the article we saw? This was the very first time that there was a planned recession.
Yeah, exactly. That was from Art Cashin. Art Cashin, who is the chief trader at UBS. I like the guy a lot. It seems like the older you get, the more honest you can be, because you don't really give a crap. At some point, it's like, right. Hey, I'm just going to tell people what I think. And as he got older, Mark Haynes was like that on CNBC too. I don't know if you remember Mark Haynes from back in the day. He passed away a few years ago. But he in the 2008-2009 financial crisis, he was really, really good. But Art Cashin is really old now. I'm surprised he's still on the floor, but
he's never leaving.
Yeah, he said this was a planned recession. They were planning for it. Anyway.
All right, yeah, we'll wrap her up. We hit all 3 targets on the ES trade, so look for the masterclass coming out, and I'll show you exactly how I do this.
Yeah, I'm going to dive right into those right now, actually.
Yeah, let me know what you think, Dave. I'm looking forward to your feedback.
I will.
All right, guys. We'll see you on Thursday. Look for a new link with the password embedded in it. Don't worry, it's still safe. But we'll be switching that up on the next Zoom.
Sounds good. We'll see you guys on Thursday. Have a great day,
Greg.
man.
Appreciate it. Thank you, Dave.